and jobs in general are only going to go down dramatically in the coming years until all of the waste, all of the overcapacity from 15 years of maniacal money printing is washed through.
Fortune favors the bold, which is why billionaire Eric Sprott and legendary investor Rick Rule are taking advantage of the lowest valuations in the mining sector in over 3 decades by accumulating millions of shares of this tiny new stock led by Keith Neumeyer, a mining entrepreneur who has already built 2 separate billion-dollar companies. This new venture, starting with 18 assets on day 1, including gold, silver, copper, and zinc projects, has already identified 60 additional quality assets in distressed companies that management will work to acquire. To learn more about this incredible opportunity, visit futuremoneytrends.com/fortune.
Well, hello everyone, and welcome into CrushTheStreet.com. I'm joined today with Andy Hoffman. He's with MilesFranklin.com. If you're looking for a personalized service, a great place to buy precious metals, check out Miles Franklin. They'll definitely take care of you. But I'm joined today with Andy, who's just an expert when it comes to financial analysis, precious metals, and the economy. So he's a favorite on this show. Andy, thanks so much for joining me today.
Oh, it's quite a pleasure. It's another Fed day today, and I think we're going to learn more and more today about how far away we are from the Fed ever raising rates. In fact, I wrote today again my 4th article about negative interest rates, how I believe that ultimately all central banks will go there before the final hyperinflationary collapse.
Was it coincidental that right when they were hinting just this last summer that they were going to raise interest rates, that the economy and the stock market started to really falter? Do you see any coincidence there, or did they just luck out that they were able to kind of use that as an excuse?
Well, I'll put it this way. I mean, right now, markets are more manipulated on a daily basis than ever before. And so is the media, partly because they're dumbed down and partly because some of them are captive to the whole situation. So you'll hear constantly, they'll say stuff like, as if they know, well, markets are falling because they expect, the rates may be, which is not just an opinion. Sometimes it's a very compromised opinion. And the fact is, I've been saying along, they'll never raise interest rates. How could you when you have the most debt of anyone on the planet? Frankly, the Fed itself is more leveraged to higher interest rates than any entity in the history of mankind, with a $4.5 trillion balance sheet of long duration toxic mortgage and treasury bonds trading at all-time high yields. So they were never going to do that in the first place. And when you see the collapsing commodities and collapsing currencies around the world, and the White House itself warning the Fed about the impact of a higher dollar, the concept of why anyone would believe that there was going to be higher rates is silly, let alone the entire market. And again, you look at commodities collapsing, economic data collapsing. Tomorrow we're going to have another horrible GDP number, et cetera. I mean, the last week alone, every number has been horrible, including the last month's jobs report. So why would anyone believe that the Fed was going to raise rates? It's not even like the Fed has even said they would. Yeah, they get some jawboning. They get a good cop out there every month that says, yeah, we should. But they never do it, and the vote is always 12-1. And the data gets even worse. And actually, this month, I haven't even heard any jawboning. There's not a single Fed governor who's been out there even talking about the potential to maybe do it. And the reason why is because you can't. It's never going to happen. The next move down is going to be negative interest rates like they already have in Europe, like they have in many parts of the world, like Japan will join eventually, and so will China. Because even though it's counterproductive, look at what's going on in Japan, having these ultra-low interest rates. It doesn't get you manufacturing jobs or improve your economy, but politically it's the most expedient thing to do because people think that it's going to help, even though it never does. So every government is going to continue lowering interest rates down to nothing and below. And eventually you'll have a currency crisis, not just in the third world currencies, like we're seeing now. On average, by the way, every currency in the world is at or near its all-time low. But in the printing press currencies, like the major ones like the Fed and the ECB, eventually they'll have major currency crises as well.
Andy, what does an economy look like? And what I mean is, what do the people experience in the situation that you're describing? What is life going to be like for people trying to get jobs? What is life going to be like trying to buy groceries? And just the experience of the American dream from what it was to where things are going.
Well, look at where it is in a lot of parts of the world. Again, I can't emphasize enough, whether it's the gold bear market, which I say with quotes around it, because A, it was all due to manipulation, and B, in most parts of the world, gold is at or near its highs because their currencies have collapsed so much because of, by the way, the Fed printing all that money and exporting inflation over to them. But you look at these countries, and they are experiencing a horribly surging cost of living. A lot of these, let's say, BRICS. I mean, the BRICS, the vaunted BRICS that are supposed to that Goldman said would rule the world for 50 years. Brazil, currency all-time low. Russia, all-time low. India, all-time low. South Africa, all-time low. And all that's left is China, which eventually will be at an all-time low when they devalue. And what happens way out in the future when they announce how much gold they have, that's another story. But the fact is that around the world, these crashing currencies are a hint at what the world is going to look like in the first world economies, like here in the States. Venezuela is a perfect example. Brazil is a perfect example. We're talking about social unrest, rising cost of living. As for jobs, the jobs are being lost for a completely different reason than inflation. It's because of the overcapacity, the historic overcapacity of everything from commodities to government to infrastructure, because of all the money printing and financial engineering of the past 15 years, which has caused so much unnecessary capacity to be built up. So high-paying jobs, certainly, and jobs in general are only going to go down dramatically in the coming years until all of the waste, all of the overcapacity from 15 years of maniacal money printing is washed through.
Andy, I want to get your thoughts on precious metals. I can't leave you without talking about it. The perfect storm of events, potentially peaking production, supply shortages, and the global monetary disaster all coming together. Are you leaning towards any one reason in particular as to why metals are poised to thrive?
No, I mean they're all. First of all, they're all intermingled. I mean, collapsing supply is a direct function of the low prices. In fact, we're going to have some of the major miners will report earnings today. We'll see if they have been forced by the accountants to start recognizing their overvalued reserves and resources at these prices, or if we'll have to wait till year end, or maybe not if prices surge, if the cartel, for instance, starts to get broken in the next few months. But it's set in stone that we've already hit peak gold and silver for years to come. And silver could be particularly bad because half of the silver in the world is byproduct of zinc, lead, and copper mines, which are amongst the most oversupplied, overcapacity ridden commodities out there. As for demand, again, they've been holding the paper price here, but at the expense of what? That future production, because there's been no capital put into the sector for years. There's been no discoveries. All the personnel have left. And the costs, of course, like in oil and other commodities, have gone up as all the low-hanging fruit was picked anyway. At the same time, you've seen vanishing inventories, or even objectively, the COMEX inventories, the Shanghai inventories, the GLD fund, the ones that even the cartel are showing you are plunging because they're being taken away by the Chinese and other people who are desperately seeking metal. And, of course, we here in the States, where people don't really care about metals just yet, we've had major silver shortages this year. I mean, major shortages. According to Andy Schectman, our president, he's never seen anything like it, including in 2008. The amount of people, for the amount of regions that are fearful of their currencies, of what's going forward, that want to own a scarce commodity. And then, of course, it's around the world. We're going to end this year, despite prices really haven't moved in the paper world, with record gold and silver demand everywhere. I mean, the total numbers for 2015 will blow away the numbers for 2013 or 11 around the world. So record demand, plunging supplies, plunging inventories. And of course, that's just the economic part of it. The monetary part, meaning the exploding money printing, is just getting started. That's what really fuels the explosive demand.
when it comes to mining stocks, I wanted to get your thought on this. Are you optimistic about mining stocks in this time? And could we see mining stocks take off without a rising metals price if metals were prolonged and suppressed down?
Well, they're certainly not going to rise without a rise in the price. Of
a
gold and
substantial
silver.
rise, though, right? I mean, because
Yeah, well, look, I mean, look, you know well. Everyone who knows me knows well. I owned these things for 10 years. I sold my last mining stock in 2011. I worked for 5 years in the mining industry from 2006 to 11. I've been around the world seeing mining properties, financiers, all that stuff. So I know what I'm talking about with this sector. And of course, I worked on Wall Street for 15 years, including 7 years as an oil field sell-side analyst. So I know how this game is played. I know what the issues are. And for 4 years, I have warned people not about whether mining shares are going up or down, but warned them of the immense risks in this sector, which not only is a terrible business, one of the worst ever. Heck, Deb Casey calls it the worst business in the world. But also they are more suppressed than any sector because the naked shorting is unlimited, unlike physical gold and silver, where you can naked short GLD, but it causes an impact on the physical world. You can make up as many Newmont mining shares as you want, and that's what they have done to the point where they put the mining sector in dramatic financial distress right now, worse than they've probably been in decades. So, look, if the cartel's broken now and prices go up, and I don't mean broken because there's a nuclear war, I'm meaning, if there's a gradual breakdown of confidence, yeah, the mining shares could do very well. Not all of them.
Right.
And there's no guarantee how they will do compared to gold and silver prices, but there's obviously a good chance that they do well, at least the best ones. But that said, there's also a good chance that things don't go well, and all the myriad negative things that typically occur in the sector get worse. And that would include bankruptcies and write-offs and all those things. So I have no opinion on mining shares. I simply say to people, and have for 4 years, that they are speculations, and very risky ones at that. And they are not proxies for gold and silver. They are simply speculations which may or may not or may outperform gold and silver prices on the upside, and they certainly have outperformed with quotes around it on the downside for many years to come. In fact, the junior miners peaked in 2007. And the senior miners in 2011 with gold and silver prices. So again, it's a very risky speculative sector to be in, particularly the less financially stable companies and the ones that have weaker projects and weaker reserves. But of course, there's a possibility of doing very well in them if you're careful and lucky.
Yeah. Yeah, and I suppose if the mining stocks do well, it could just be the catalyst too for precious metals and vice versa. I mean, one or the other could switch the sentiment, cause something to break, and cause that chain reaction to happen that could send precious metals through.
Well, I mean, no. I mean, the mining shares are not going to lead precious metals. I mean, precious metals will lead the mining shares, again, assuming you don't have crazy events. I mean, if there's a nuclear war or like some government confiscation type of thing of mines, it's going to be gold that leads the mining shares, and mining shares would do better as there's more confidence that the price will go up. I mean, that's the main reason all these rallies stall, because everyone is fearful of the cartel coming in and knocking prices down. In fact, right now, both gold and silver have finally broken above their 200-day moving averages for the first time in 5 months after a epic battle over the past 2 weeks. And I can guarantee you there's plenty of people that are worried that breaks down. And look, if today, for instance, after the Fed speaks, if the cartel successfully comes in, and the Fed's not going to say anything, but if they did and the cartel successfully comes in and smashes prices back below the 200-day moving averages, they'll come in and destroy the mining shares again, because there's not a lot of confidence in the sector. But if there's more and more confidence, if we finally have prices moving up after 4 years, there'll be more and more confidence in paper gold and silver vehicles. That is until crazy things like I'm talking about happen, which inevitably will. But in the meantime, we sit and we wait to see if the forces of reality win out. And again, this whole thing, you go back to April 2013, you had this closed-door meeting between Obama and the too-big-to-fail bank CEOs. And I'm no conspiracy theorist. I'm the furthest thing from it. But I mean, my God, I never heard of anything like a closed door meeting like that. And that very day, Goldman Sachs puts out an aggressive short sale recommendation on gold. And then over the next 2 days, gold goes down $100 and silver falls like $6. And that was when all of a sudden the word tapering started to be talked about, and the imminent rate hikes and all that stuff. And here we are years later, 2.5 years later, and rates are sitting down near their lows, and the Fed is on the verge of giving up entirely on rate increases. There's been no recovery. So all that was predicated on, all those lies are being shown for the whole world. And that's why you're seeing record demand, and that's why you're seeing this upward trend in even the paper gold and silver prices that we haven't seen in a long time, and of course the explosive physical demand. So, I do think, cautiously, of course, because I've been around this game now for 14 years, that things appear to be turning in the direction of reality. And if they do, well, we'll see what happens with mining shares. Maybe they do very well, and maybe they don't. I don't know.
Well, there you have it, everyone. Andy Hoffman with Miles Franklin. Andy, thanks so much for taking the time with me today.
Oh, you're very welcome.
And if people want to reach out to you, Andy, just maybe you can give them a little idea of what they'll find and where they would go. Better than I did.
Right. Well, Miles Franklin, Precious Metals, we've been in business 26 years without a single registered complaint. I do a free blog every day with David Scheckman, our co-founder and CEO. Go to milesfranklin.com, and you can call us 800-822-8080. Or as always, you can email me at ahoffman@milesfranklin.com.